Ryan Zinke, he served as the Secretary of the Interior under U.S. President Donald Trump during that first administration. He's also a former director of U.S. Gold. Luke, he was on your board for 3.5 years before taking a seat in the U.S. Congress, so you know him pretty well. I'm curious,
Yes.
based on your conversations with Zinke, as well as what you saw during Trump's earlier term, what do you think a Trump presidency would mean for mine permitting?
It's they were in there trying to fix it all, sort it all out. Ryan's a huge proponent. He's all about US generating its own resources, and I know that that's going to be the return. You know, once if they get back in, if their administration gets back in. But when I look at the election itself, I think you know, gold loves chaos. I was just having this conversation with the co-director of the company. Gold loves chaos. So either way, this election swings, we're going to see chaos, I believe. And I think gold is just poised. It's kind of smelling that right now.
Well, the markets generally hate uncertainty, but in times of uncertainty, like you say, people go for gold. I'm
Mm-hmm.
also curious, you and I were talking about this earlier, and you shared that while you think a Trump presidency may be better for miners, you told me that Harris might actually be better for gold. Why is that?
Revert back to my previous statement, chaos. I think there will be a hell of an uprising in terms of, pushback if Harris wins. I sense that. It's not my politics. Obviously, I'm a Canadian New Zealander, but from my time in the US, from spending a lot of time with gold centric investors, I think there will be a lot of pushback if it's a Harris win. I just believe that.
All right, well, thank you. Today's discussion is also an opportunity for our viewers to ask questions of the panelists, and I see a couple already coming in. To ask a question, just find the Q&A button on your screen. If you're on a PC, that's at the bottom center of the screen, and if you're on a tablet, it is located near the top right. All right, at the moment, political risk in the US might seem quite high, but if we take a broader perspective and look beyond these elections, is it possible there's less risk in the US mining than elsewhere? Jason, you've worked on projects in other parts of the world. Why are you focusing your efforts now in the US?
Yeah, I've worked around the world in West Africa, South Africa, and all throughout the Americas, and frankly, I'm not wasn't really fond of getting kidnapped and all that sort of stuff in Latin America, and one of the things you're seeing is more push to nationalizing a lot of these metals or higher taxation, and the beauty about being in the U.S. or in North America in general is it's a pretty predictable environment. And the key to our business is predictability and consistency, and to kind of maintain your integrity as a mining company. And when you push something that's out of your control, like a government that keeps on getting overturned, makes us very hard to do our job and allocate capital in a responsible manner. So I prefer working in very predictable countries, and that being in the US and in Canada.
Returning to the elections again for a moment, Donald Trump has consistently said that he thinks he should have a voice in how the U.S. Federal Reserve sets monetary policy. He is not a strong advocate for Fed independence. John, if Trump wins, what do you think happens to the Fed, and what would that mean for gold?
To Luke's point, more chaos. There's no way that Jerome Powell survives next year, in my opinion, as the chair of the Fed if Trump wins. Trump has been very vocal about removing him. That's going to cause another entire, wave of buying, I think, for gold and silver. If the average investor doesn't really realize this already, we all realize this on the panel, but it's going to be very difficult, even though Powell's a former attorney, to walk around the obvious, which is when Trump gets into office, if he wins, he's going to be out. And again, gold loves uncertainty. What does that look like? What does the Fed look like? You can see what Trump already did with the Supreme Court, right? So, he's all about power, and I think that he's all about lower rates, right? He's been very transparent that he is all about lower rates to support his own real estate portfolio. So I think we see lower rates next year in a Trump presidency.
From what I've been reading, many analysts believe that a Trump win, coupled with his likely stance on raising tariffs, could dramatically alter the trajectory for rate cuts, I should say, possibly even bringing those rate cuts to a halt. And then, Jen, like you say, that could lead Trump to exert greater pressure on the Fed, perhaps firing Powell or taking other measures to bring him to heel. Let's switch tracks now. One of the biggest issues that you hear people in the mining industry talk about, particularly in the U.S., is permitting. I want to zoom in on Wyoming first. It has a reputation for being a mining-friendly state. At the same time, though, U.S. Gold's CK project is the first gold mining project. In fact, it is the first hard rock mineral project of any kind to be approved in the state of Wyoming in more than 100 years. Luke, tell us about that permitting process. How long did it take?
Well, the beauty of dealing with a state level regulator versus dealing with the federal regulation is that they have clear guidance in terms of their timeframes. So we entered into what was going to be a 12-month process. We, as a company, extended it. We chose to include a industrial sightings permit, but we dealt directly with the Department of Environmental Qualities, whom oversee several branches within the permitting process. We dealt with 5 of those branches, from air quality, water management, all the way through to land use, the works. It is easily as stringent, if not more stringent, than the federal process. However, you are dealing with timelines, you are dealing with real people, accountability. So it was a remarkable kind of a scenario. Everyone thought we were crazy when we started talking publicly about our timelines to receive those permits to mine. But in a well-run government, which state Wyoming is, it is a process. And look, again, just as stringent. The environmental standards, environmental qualities are just as stringent, if not more, than what the federal agencies would have been. Thankfully, we didn't have any interference by even the Army Corps of Engineers, because there were no Waterways of America's involvement. But Wyoming receives over 60% of its revenue through natural resources. And a lot of those are pushback resources now. No one likes coal. There's pushback on oil and gas, especially fracking. So look, between what we've done and managed to do with our hard rock permit, all the way to through what Robert's doing with his team in terms of looking for more, I think this is a pathway into Wyoming that people should be really paying attention to. If you want to get permitted, if you want to get work done in the US, take a look in Wyoming.
All right, so just a real quick follow-up on that. If your mine had been located on federal property instead of state land, how long do you think the permitting would have taken?
I'd be a lot grayer. Look, we have no water table issues anyway at this project, so that would have been a savior. Again, no Army Corps of Engineers, but you're still looking at anywhere from 7 to 10 years. It's heinous with what's going on. But just in Nevada, we have one of our core assets, the company, our company flagship originally is Keystone in Nevada, and we want to get after that project, but it took us 3 years to get through our plan of operation. That's inexcusable. That's just to explore the project, not to develop it. So I think with the Trump administration, you're going to see a revert back to trying to speed up these processes. And really, it's the same thing as what we had to go through in Wyoming. There just has to be accountability and some sort of time management on behalf of Bureau of Land Management, Forestry, and the other federal agencies, because look, the US needs to get back to work and resources.
All right, so Wyoming clearly much quicker than the U.S. federal government. Some people on the other side of the spectrum, they might ask whether or not Wyoming is being as stringent when it comes to the environmental impact. Luke, you've said it is. Rob, you also have experience in Wyoming. I'm curious if you agree with that.
Yeah, completely. I would fully echo those sentiments. What we've experienced in Wyoming is very similar to what Luke is experiencing over there in Cheyenne, and that is really extremely stringent policy, but a clear navigable path to follow, right? And accountability along the way. And so when you combine those things, you actually get a process that works, that is protecting the environment, that is putting environmental stewardship first and foremost as part of that process, but showing the applicant a very clear path of how you actually get there, how you need to go through the process, and then following through according to those timelines that are laid out. And so we've experienced the same things. A lot of our stuff has actually went faster than the timelines. And then we see widespread support from the state of Wyoming. They've been investing a significant amount of capital into not only developing resources domestically, especially the hard rock mining resources, flying geophysical surveys, collecting these new data sets, but also looking at their regulations regularly and saying, how do we continue to improve? How do we continue to streamline our process while managing environmental stewardship at the highest level? So I would agree with that sentiment completely. And, I think I just feel fortunate. My background in consulting has given me the opportunity to operate in almost every major mineral jurisdiction in North America. And, Wyoming, I'd say, is equivalent or sometimes even better than Nevada in certain scenarios. So, and again, echoing that their GDP is so heavily dependent on natural resources, they do take it very seriously as far as the environmental impact and the community impact. And that's all part of the process.
All right, good to hear. I'm going to take a question from one of our viewers now. Someone says that considering Trump's history of imposing tariffs and Harris's potential trade strategies, how might their trade policies affect the global demand for gold? John, you want to take that? How might the trade policies affect global demand for gold?
I really don't know the answer to that. I'm not going to skate around it, but I would just say that gold is in an uptrend. That's not going to change with either of these candidates winning. Let's just be clear about that. As I said earlier, I think Harris would generate a knee-jerk reaction down. Don't forget that she's talking some really crazy things regarding capital gains. And I think when you look at the broad rally starting in the broad market, meaning S&P, NASDAQ, et cetera, starting March of 2009, that people are looking at this very, very closely next week, right? We're doing this November 5th, right in the middle of tax law season, which again, I'm always saying to people, you have to watch tax law season. You cannot just look the other way and think that your stock isn't going to be under pressure, because it will be under pressure, right? And so I think that would generate a lot of selling on Wall Street. My fear is that since when you look at previous corrections, Michael, right? We had the 2000 to 2003 recession that lasted years, not months. You look at the 0809 correction that lasted less than 1 year. You look at 2020, excuse me, for COVID, that lasted 2 months. These corrections are lasting less and less time, is my point. That's because there's more algorithmic buying and selling in the market now. Things happen very, very fast. And I remember trading February, March of 2020, and I do this for a living, and I couldn't even keep up with the velocity. So I think people need to really take a hard look at their portfolio today and tomorrow and Tuesday and just try to get some cash built. I mean, that's what we're doing right now, just to be sure that we don't get some surprise on election day that's going to be detrimental to our portfolio.
Okay, really interesting advice and perspective there. I want to turn now to tax incentives. U.S. states compete against each other. Indeed, they compete against projects across the globe by offering a variety of incentives, from tax breaks on machinery to property tax reductions and rebates for creating new jobs. Jason, I'm curious, from your experience, what state do you think offers the best incentives?
I think there is part of the Inflation Reduction Act that was put in 2022 gives us basically about 10% on production on critical minerals. And that's really the only thing that we see from a tax incentive from the government, and nothing really proposed for other mineral exploration or production, frankly. All of us being precious metals companies here. And I think it's really important to know that all minerals are frankly critical. Nothing more critical than monetary policy, frankly, in preserving the wealth of everyone's portfolio. So, we don't see the incentives that you would see up in Canada via flow through or charity flow through in the United States.
Rob, how important are tax breaks when you're evaluating a new opportunity? Is it enough to sway you to choose a project in one jurisdiction instead of another?
We're a very technical group. We follow the data, right? We're looking for big, high-grade gold systems that are ideally going to be insulated from the minutia of taxes on a statewide basis. That said, I have experience in building businesses and way more experience with the U.S. tax code than I probably would like. And Wyoming being a no income tax state, from the idea of building mines and building out new jobs and employees, it's a really beneficial place to operate for the individuals that are working with the groups. But on top of that, similarly with, as Jason had mentioned, from a federal basis, there's potentially that benefit from the IRA, but again, the eligibility component based on criticality of minerals. But I think there's other incentives that you should be considering when you're looking at states in the U.S. to operate and develop. And one of the many reasons we're in Wyoming, they're investing capital into developing the hard rock mineral industry actively as we speak, and recently have put out grant opportunities where they're matching potentially up to 50% of some of these exploration expenditures to develop the data sets for the state. So those are the types of incentives that we look for, because they far outweigh the actual tax incentive that you're eligible for.
Interesting. There's another question here from the audience I want to bring in. Robert asks, are you afraid of potential labor policy changes after the elections and the cost of skilled labor in mining? Do any of our miners like to take that one? Are you concerned about how the elections might affect the labor market?
I think that's always something that we have to really look at. And frankly, our industry really lacks skilled labor. That's a fact. And not only skilled labor, but technical experts as well. It's one of the biggest problems facing our industry, which will ultimately drive metal prices higher. And as we talk about the elections and all that sort of stuff, I think, all roads to lead to inflation and de-dollarization, and the gold price movement is really coming from the US, and we really need to start focusing on the people in the US that can do these jobs.
Luke, did you want to add on to that?
Yeah, I just think more the election kind of focus is around minimum wage, and we are talking skilled labor. You attract people globally into geologists. Like half the geologists in the industry here are from Australia or abroad. In the US side anyway, Canada obviously has a very rich pool of qualified people in that industry, that side of the industry, excuse me. But yeah, I don't see that spilling over as being an issue for us. I mean, location in North America can obviously have an impact. If you're in Alaska versus being in Nevada, you're going to have a little bit more. It's going to be a lot more costly to entice people to come up and work for you. So I don't think that's really an election issue. I think that's just more a shortage of qualified personnel in the mining sector. Not many kids are getting out of bed in the morning and saying, I want to do a geology degree.
Well, I had some friends who did, but there should be more of them. I want to bring the conversation back to investing now and take a look at how the shares of our panelists are doing vis-a-vis the price of gold, as well as in comparison to the big three mining companies. Shem, if you could bring up the slide, please. We're going to see how the big three miners are doing. You can see that Agnico Eagle is outperforming gold both this year and over the past 12 months, but Newmont and Barrick are not. John, what are your thoughts when you see this?
Well, we just saw Newmont come out with earnings October 23. That ticker is NEM. Their costs went up again. The market wasn't ready for that, and they had their worst day in many, many years. We put out a note the following day just saying that was really an overreaction if you believe in the path of gold. We didn't buy any. We have a zero weight on Newmont. We have a zero weight on Barrick, but we do have Agnico in our top 15 holdings because the chart looks absolutely beautiful. They came out with earnings October 30th and killed it. Their costs all-in sustaining are, I think, about $1,280 an ounce, which is very, very doable when you look at someone like Newmont at 1,600 plus. So Agnico is just clipping a much larger margin, and that's one of the reasons for their ascent.
There's been a disconnect this year between the share prices of many junior mining companies and commodity prices, with the miners lagging behind. If we pull up the next slide, Jason, we look at your stock. It has done better than gold over the past 12 months, though it is lagging a bit behind this year. Why do you think that is?
I think we've done two financings this year and did a pretty big M&A deal, which puts pressure on the stock. Frankly, there's a lot of room to catch up over the coming months as we re-rate from a developer into a producer and potentially being included into the GDXJ in 25, and people will be positioning into that inclusion.
If we look at the numbers for U.S. gold, it's doing quite a bit better than the price of gold, both over the past 12 months and in the year to date. Luke, when you and I were chatting about this earlier, though, you emphasized that it's all a matter of time horizon. How so?
Yeah, that's a bounce off the bottom. We had a major fundamental event. We came out with permits to mine. Again, we've got a $325 million net present value project from 2021 numbers, $1,625 gold. Traditionally, we trade at 0.6 to 0.8 of that in our current stance with a P1, P2 reserve, great jurisdiction. That's $180 to $240 million market cap. We're a $60 million market cap. So, a bounce off bottom with a big fundamental, inclusion like that to a company, I don't think we've moved at all, shifted at all. But I think, why no? I mean, the inflows of capital from the generalist investors has not shown up yet. That's in part because of poor management. I think even amongst the majors over the last 20 years, people are aware of that. But a lot of cleanups going on in those major books now. Debt cleanup, the culled some assets that they didn't need to hold on to. When this capital inflow comes into this sector, it is going to be strict. It's just going to head to the moon. But anyway, look, year to date, we look really like we've had our run. Again, our average cost base as management is still probably close to double where we trade today. So there's a lot of upside.
Rob, if we look at your share price, I see on the chart there up 21%, 23%. So good returns, not quite as good as gold, though. Do you think you're going to catch up to it anytime soon?
Yeah, certainly. I think, being on the earlier side of the exploration sector in the junior mining stage, it's no secret that the challenges have been there for the micro caps and small caps in our sector. And we've really outperformed that as a whole. And largely because we've been able to secure capital and continue to develop our projects as planned systematically. And what that's done now is it's really put our portfolio on a pedestal as we look to this secular bull market. And we really haven't seen any of that generalist investment come back in. And once we do, we'll start to see that tide rise. And the last place that it goes up is in the small cap component of the sector. So I think by all means, we're really just getting started to see this re-rating in the earlier phase of this exploration cycle. And you combine that with how well we've teed up our portfolio, our team, and our allocation of capital structure to folks like Mr. Rob McEwen and Kinross and New Gold, amongst others, and myself and co-founders still being the largest shareholders. So we really see ourselves in a unique position as we look to this rising gold environment. And I think there's a lot of upside potential there for us.
All right, well, thank you. A note to our viewers, please be sure to visit the Investor TV website. That's at investor-television.com to sign up and receive exclusive invitations to future panel discussions. Our next discussion is in 2 weeks on Friday, November 15th. We're going to take a look at investing in the EV ecosystem, from lithium to solar-powered electric vehicles. We have some really interesting companies participating in that discussion, so please be sure to join us. All right, as we mentioned at the top of the show, it's been pretty unusual for both gold and equities to be trading in the same direction. And yet, the S&P 500, the NASDAQ, the Dow Jones Industrial Average, and gold all trading at or near record levels. So I'm wondering, could the gold markets actually be predicting a stock market reversal? Luke, what do you think?
No. Matter of fact, we don't. Okay? Because as goes the market, goes gold, equities. I can look back as far as 1928, or we can look at 2008. When there's a flight to liquidity, when the markets crash, gold equities and gold itself follow that. It's just a flight to liquidity. So that would be the really wrong bet if people were buying up gold equities, believing that there was a future market crash. Now, in that, when crashes do occur, again, look back to 08 or as far back as 28, the equities follow, especially in 28, there was 19, I'm sorry, I'm talking 1928, of course. There was no proxy. Well, sorry, the equities were the proxy gold because gold was a fixed price. So they followed the Dow Jones down, but then they rallied 600 points up. So home stake mining is a good, again, proxy for that trade. So no, I don't think that gold or gold equities are reading a future catastrophic event, because otherwise you'd just be flying into liquidity right now.
All right. Well, thank you for the historical perspective. I want to turn into something a bit more recent. Since the end of April, global investors have poured more than $11 billion into gold ETFs. That's according to State Street Global Advisors. John, you specialize in commodities and you prepare a monthly Fennec Commodities report. And you have your own investment portfolio. And I want to take a look at that because not long ago, you posted the latest results for the Fennec Metals and Mining portfolio. That's on your website. If we take a look at the numbers, if we can get those on screen, your portfolio is doing better than big exchange trade funds like the VanEck Gold Miners and the VanEck Junior Gold Miner ETFs. It's outperforming the Russell 2000 Index Small Cap Index as well. What explains that strong performance, John? How are you doing this?
I describe myself as, for anyone who likes horse racing, as a horse with blinders on. I don't really talk to other newsletter writers or analysts. I look at facts, right? I have a great relationship with US Gold, and I talk to Luke on a monthly basis about, what's happening in Wyoming, what's happening with the project. I attribute our success to those kind of relationships dating back to 2008. We went public with this portfolio January of 2016. But I have been cold calling people like, Keith Neumeyer at AG and Mitch Krebs at CDE for literally 16 years. And that really helps when you have concerns about valuation or concerns about public news. To be able to pick up the phone and dial people like that is very useful. So we are also overweight certain things, Michael. I should say that coming from the portfolio management world, one of the things I hated about that, working at large institutions like Merrill Lynch or JP, was that you have to be 80% invested at all times, right? That's standard in the US portfolio management world. You have to have 5% or less in a particular name. That's really not allowing you to overweight certain things when you have conviction. For example, right now we have a 6% weight on US gold, right? We would never be able to do that if we were working in those type of constraints. So we basically, just try to grind every single day and try to put up good numbers. And I think if you look at our entire body of work, which dates back almost 9 years now, we're well ahead of just about everyone we compete with.
So you mentioned that U.S. gold is in your portfolio. Can you give us an indication of what else is in it? To what extent does it include gold and gold miners as opposed to other commodities and companies in the mining space?
Yes. So right now we have about a 45% weight in gold miners like USAU. We have probably about 25% in silver miners, and the rest is spread amongst copper, tungsten, tellurium, palladium, different special situation kind of commodities. And the reason for that is, as Jason pointed out, the world right now in terms of critical minerals is like at a precipice for us. We talk to people in the U.S. government quite frequently. I used to work out of D.C. The U.S. is far, far behind in its commodity war, I would call it, with China. China is just killing it in terms of producing things that are relevant to the world, right? Give you an example. Tungsten, which is something I didn't follow until about 2 or 3 years ago, is 91% produced in China. The US literally produced 0% last year and the year before. So we're buying tungsten companies because we think that will be the next antimony. If you look at Perpetua, PPTA, that chart was doing nothing for months and months, and then all of a sudden antimony became, the new buzz, and the stock, I think, doubled pretty quickly. So we're looking at, special situations like tungsten and trying to buy U.S. assets or North American assets, to the point of this entire panel, because we look at jurisdictional risk very seriously, and we'd rather have money in the U.S. or Canada as opposed to places like the Congo.
Really interesting. Shem, could you bring up a slide on copper, gold, and silver, please? Because we have a question from the audience about different commodities, asking how attractive is U.S. gold mining for investors compared to other resources sectors, and what innovations may be helping U.S. gold mining companies, reduce costs and increase efficiency. Okay, so we don't have that slide at the moment, but gold is doing better. There we go. Gold is doing better than copper, not quite as good as silver at the moment. The question from Yerlin is, how attractive is U.S. gold mining compared to other resource sectors? John, you want to give us a quick answer on that?
Can you repeat the question?
The question is, how attractive is U.S. gold mining for investors compared to other resource sectors? And are there innovations that might be helping U.S. gold mining companies reduce their costs and increase efficiency?
Well, as Luke pointed out, and we haven't heard from the other two panelists about costs. I mean, costs are going up, right, since COVID. That's just a fact. But our thesis is that the price of gold is going to make up for that and then some. So we don't really get worried about costs going up at this point. I was really worried in 2021, 2022, when I started to see, feasibility studies or PFS, pre-feasibility studies, coming out and seeing these CapExes just go up enormously. But we're not as concerned anymore. We think that the price of gold is making new floors, meaning last year it traded at 1,900 an ounce for over 5 months. It never closed below 1,900 on a single day, right? This year, I see that floor is 2,200 to 2,300. Every time we test that, it bounces, and now it's just taken off, right? So like you're seeing, take a look at the 15 or 20-year chart of gold. It looks absolutely beautiful from a technical perspective. So we're not worried about gold just doing what it's doing here. We're putting a lot of our time and effort into evaluating companies like the three panelists here, and trying to find how do we build positions into equities, because there's a lot of leverage in any gold equity as opposed to just buying the price of gold, whether it's physical or through an ETF.
All right, well, speaking of our three companies here, our three panelists, let's turn back to them. I'm going to give each of you an opportunity to tell us why your company is a good investment. You're going to have 60 seconds to make your pitch. Luke, you're up first this time. Go.
Okay, well, for one, we're fully permitted. As an investor, also, I'd be keen to know that we are US listed, senior US listed, with a over $5 share price, up in the mid $6 range, I think today. We're blue sky for retail investors as they show up into the marketplace. We're one of the few companies out there that they can buy into. We have an extremely strong management team, which I didn't really get into, but we managed to harvest the ex developer from Barrick, George B., who built some of the largest gold mines on the planet. At our helm, he's been the one who's been in state dealing with all the regulators and different people in state. We have a very tight share structure, as I touched on, and we're one of the very few bucket-ready, shovel-ready projects. So aside from the fact that obviously we need to now move towards development, I think there's a lot of focus coming our way from other interested parties who want to bolt on another 100,000+ ounces of production. So enticing M&A activity, whilst we also start to, I think, recognize the untapped value in the company. I think we're a great investment opportunity right now.
All right, thank you. Jason, tell us about your company. Go.
Yeah, the beauty about us is that you have immediate exposure to the precious metals price. We'll be doing around 70,000 ounces, moving up towards 75,000 ounces next year. We're meeting guidance this year. So you have immediate exposure to the gold price. More importantly, once we close the transaction, we'll be coming out of the gate around 0.25 on a price to net asset value. As Luke mentioned, producers trade in the 0.6 to 0.8 range. So there's a significant re-rating opportunity once we close the transaction in the next coming weeks. More importantly, investors have exposure to $1.2 billion of mining NAV US. So you put a 0.5 on that or a 0.6, your investors can do the math on that. It's pretty easy. Also, we have a really robust built-in pipeline that'll allow us to triple production over the next 5 years. Lastly, we have a strong institutional shareholder base. Myself, the largest individual shareholder. We have Alamos as one of our biggest shareholders. Wheaton Precious Metals is our second largest shareholder, and BD Capital. So if you don't believe us, you can follow one of the best miners globally, and that would be Alamos, and the largest precious metals and royalty company in the world, which would be Wheaton as our major shareholders.
All right, thank you, Rob. What about Relevant?
Well, we're capitalizing on that upside of discovery, which, as we know in the mining equity space, can provide some of the largest returns if successfully driven through that process. And we're doing that through creating a pipeline of these discovery opportunities. As I mentioned before, we now have 17 high-grade, truly district-scale assets with a direct connection to the Abitibi during the time of gold mineralization. This is one of the most prolific metal regions on Earth. You combine that by being backed by some of the top capital providers out there with strategic partners like Kinross, investors like Rob McEwen, New Gold, and being led by an incredible management team that has created billions of dollars of value through concept discovery and taking things into production. All of that, leading us to the fact that the management group and insiders are the ones that hold and control the biggest share of the company, really showing how vested we are and how we are fully believing in the opportunity at hand. And in Wyoming, I'll touch on it for us and Luke. We're in one of the most incredible places to operate. As I said, I've worked in almost every major North American jurisdiction, and it's just refreshing to have a place that is so supportive with a clear path for development. So I really think, as far as when you think about investing in earlier stage exploration opportunities based on discovery, we have that opportunity to rapidly develop beyond discovery into kind of the feasibility and mining spectrum. And so that's kind of, with what I call the upside multiplier effect by having a true belt scale concept and a very large land position across the state.
Fantastic. Luke, we have a question for you from Bill Heng. He wants to know when there's going to be gold mining and production starting at your site near out there in Wyoming.
Didn't realize I was muted, excuse me. We're coming towards our final production decision. We have one outlier I mentioned at the front end of the conversation, which is our air quality permit. That went through public disclosures. There were no objections posted towards it. So we're expecting to see that in the next sort of 14 to 30 days. We're updating our pre-feasibility study right now as well. After some optimizations, some changes. I apologize, but we're talking to a 3-year-old study when I talk to these numbers. So we've got a few things to line up before we enter into production, but the kind of time horizon is, if we have the CapEx in hand today, we're probably up in production in somewhere between 18 and 24 months, which is, I know, incredibly quick, but again, it's the location.
Okay, 18 to 24 months. You guys heard it here first. Or John, if you were to offer advice to investors who are considering opportunities in the U.S. mining space, what would you tell them?
Couple things. We never get the entry point perfect, right? So you have to buy multiple times on any of the names like Relevant, Integra, or US Gold. Luke knows this for a fact because we've talked about this. When you have conviction in something, you buy more at lower prices. It's called dollar cost averaging. It's not just relevant to our sector, it's just in general, right? And it's one of those best ideas for investors to get behind is check your thesis if you still like the thesis, you got to buy more. And so we've bought 6 to 10 times on many of our holdings. And that way we get a blended cost basis that's going to be, something that we can live with and make money on. I mean, the name of the game is investing for money, not investing for being flat or losing money, right? I mean, if we recorded this 2 years ago, 3 years ago, we'd be looking at zero interest rates. Now you can put your money in the bank and make 4.5%, right? So like you have to get investors need to see why that this is going to be making them some money. And I think that it's helpful for companies to understand that they have to update their presentation decks and their fact sheets so that they can educate investors about the path that Luke just kind of mentioned, right? And Jason had mentioned, and Rob's in a different part of the curve right now because he's basically an explorer, right? So he's early stage, but we would argue that we've overweighted explorers in 2024. I mean, they're just so cheap right now relative to producers. We own Agnico as a producer, but we also own things like Relevant Gold as an explorer because the prices are just, they don't make sense. I mean, that's just the best way to put it. So investors need to look at diversifying across, not just the producing names, but also the ones that are earlier stage because you can make really good returns by doing that, I think.
Thank you. There's a question from the audience about foreign relations and the elections, which has me thinking about geopolitics. Competition between China and the US for critical minerals has been intense. We talked about this a bit in our last Investor TV panel that was about mining in Africa. You can check that out online. We're wondering to what extent are US-Chinese tensions impacting the gold sector, particularly in the US? John, do you have some thoughts about that?
I mean, if you look at Russia's move into Ukraine, February of 2022, China's buying went up exponentially. If you look at what happened with the BRICS just last week, the BRICS, which is Brazil, Russia, India, China, South Africa, that coalition is positioning for a alternative currency to the US dollar that is backed partially by gold. That's why China and so many of these other countries are hoarding gold, for lack of a better word, is that if this currency does launch in 2025 or 2026, you're going to see gold really take off, in my opinion, because now you have a currency that is partially backed by gold, and you have to have the gold in your possession. You can't just back a currency without owning it, right? So I think there's going to be just again a large floor on gold. And to speak to the China thing, I touched on it earlier. It's a real problem for the U.S. I co-hosted, I didn't co-host. I was an advisor to a conference in April in Washington, D.C., talking only about critical minerals. And a lot of the CEOs that attended that met with their constituents in Washington. And the vibe coming out of that, Michael, was we know we're far behind China. We know we have to do something about this, and we're trying, but we're not there yet. I think we're going to see that change in 2025, meaning Department of Defense, DoD, is going to start funding a lot of companies, and it's going to surprise a lot of investors, and we're positioning accordingly in some of these names where we think they have, really good ties to the U.S. government and are actively seeking funding.
Interesting. Really interesting about how those geopolitics could come into play here and how you're positioning for that. Before we wrap up, gentlemen, I'm curious, when it comes to managing your projects, what keeps you up at night? Rob, you want to go first?
I mean, quite frankly, the geology and the excitement always keeps me up because I am a geologist background, and on the exploration side, we're always doing really exciting things. But I think ultimately, one of the things that continues to be a challenge we touched on is that human capital infrastructure. I see this what I call the generational fart in our industry, where there's this massive gap in skilled labor and technical skill sets that it takes to really drive these things forward at the pace we want to. And if you take the example of the junior mining space that hasn't seen the large inflows of capital yet, and we're all expecting to see that in the near future, you got to ask yourself, when you're looking at these investment opportunities, what groups are actually going to be able to effecate results and execute? And the human capital infrastructure, the skilled labor component, I think that's what we're going to continue to see as a challenge as this market really goes into a true secular bull cycle.
Jason, what keeps you up at night?
Well, frankly, we've created a regional mining platform that any intermediate producer would really like to have. And trading at 0.2, 0.25 on a price to net asset value, you're basically a sitting duck here. So, one of the things that really keeps me up at night is intermediate producers that need NAV exposure to quality, the best mining jurisdiction globally by the Fraser Institute, which is Nevada, a platform that will persist for over 20 years and a production profile that will push over 300,000 ounces in the next 5 years. That's really what every intermediate is looking for. And we really need to see this re-rate in the next 12 to 24 months before someone takes a run at us, frankly.
Luke,
if I
you have
could
the
just
last
jump
word.
in, Michael.
Oh, sorry. Go ahead, John.
I just wanted to, sorry, Luke, I just wanted to ask Jason something real quick. So you had mentioned Alamos and Wheaton as big shareholders. Do you think you could get another strategic of that size potentially to kind of prevent a take under, or what are your thoughts?
Yeah, I think that's something that we always are looking for. And, Wheaton isn't, Wheaton's there to be a strategic shareholder when it comes to project financing for our Delamar project. Alamos came in because they really are excited about what we're building in the US. They're not in a blocking position at around 9%. But they just want to keep tabs on everything that we're doing and bringing someone in. Yeah, totally, for sure. But, we're in the position, John, right now where we have, once we close, we'll be around 37 million US. And at these metal prices, our AISC for next year, is going to be around 1925. So we're going to be printing money at these levels. The life of mine AISC, obviously next year is a critical year, but the life of mine AISC is 1525. That's the thing with the Newmont happen. There's good years, there's bad years, and depending on how you allocate your capital, you have to be very disciplined about it.
All right, Luke, our topic today, gold, profits, and politics. Looks like you have the last word.
Okay, what keeps me up at night? The proverbial kick between the legs that always seems to show up in all sectors, but this sector in particular. I'm acutely kind of following, obviously, the price of gold. We've had very good fortune in terms of course, our timing and getting our permits to securing a reserve and having all that. So similar to Jason, a take under, as John, you referred to it. I don't know how, I've never heard that before, but I mean, that's a concern to me for sure. But ultimately, I'm very, very optimistic about this entire sector. I do believe there's a lot of capital inflow yet to come into the space. I know that there's not as many mining centric or precious metal centric funds out there anymore. So that flow of capital is going to have to be carefully managed, and let's hope they find the right companies, quality companies like ourselves, like the group on this panel. But I just think it's all excitement moving forward. The stretch difference between the equities or the underlying equities and the metals prices themselves, that's a gap that is going to be backfilled, and it's not going to be backfilled by price of gold going lower. It's going to be backfilled by the price of the equities joining the game, joining the party. So I don't have a lot of, I sleep well right now. Let's put it that way, Michael. I think the excitement's right ahead of us.
All right, fantastic. I know investors want to sleep well too. So gentlemen, thank you very much for your insights and thoughts today.
Thank you very much for having us.
No problem.
The on-demand version of this discussion will be available online next week on Investor TV YouTube channel. Please remember to sign up at investor-television.com to receive updates and to register for that next panel about investing in the EV ecosystem, which takes place in 2 weeks' time. Until then, you've been watching Navigating Capital Markets on Investor TV. I'm Michael Swedo.